Hello and welcome to the stock specific class here for Thursday, January the 7th. By the way, the trading that we're going to do after we go over those stocks, we're going to go over some basic exit strategies. On Tuesday, we went over some basic entry techniques that you could use. Again, not meant to be all-inclusive. There's lots of different entry techniques. There's lots of different exit strategies, but these are just some basic ones to get you started, and then you can kind of build on it from there. Now, it's sometimes tough whenever I teach a trade management class, it's very tough to just focus on just entry strategies and just exit strategies. In that class on Tuesday, I did talk about some of the exit strategies along with the entry techniques, because there's some that are kind of very similar, or you can use them for both. You can use them as an entry technique or an exit strategy. And so there'll be a little bit of that today as well, but that's okay. I mean, the bottom line is to learn all those techniques and to get you started, and then you can kind of go from there. As far as the overall market, we had talked about on Tuesday the expectation that we should start trending upward, and we started off moving upward on Wednesday, and then we had, obviously everyone knows about what happened at the Capitol, and it really kind of worried me a little bit there, because a lot of it was happening right before the market closed, and the market had come off the highs of the day. It didn't go negative, which was a really good sign that the market wasn't overly concerned at that point about what was going on as far as it being a long-term thing, or but you just never know. I was feeling at that moment that boy, if any fires started in the Capitol building and it started to burn down or whatever, that or if the clashes with police really got out of control, that the market would really freak out. Now, I felt like if that were to even happen, that I still felt like that would be somewhat temporary, and the market might sell off for a couple of days. But there's concern with the positions I was in. There's concern with there's positions I wanted to get in that I held back on because of that uncertainty. But I think the way the market closed yesterday and the way that it is trading today, it really is acting like it wants to go higher, and it really is. I mean, this is where you can look at some of the these are, you can kind of sense that the market really wants to go higher. You hear me say that a lot, where it says it feels like the market wants to go higher, it feels like the market wants to go lower. You can't really calculate that. It's one of those things. It's like momentum, trying to understand momentum in a football game or something, where you can feel it, but you can't necessarily calculate it. You can't. It's not an equation you can kind of focus on. But you can kind of feel that type of momentum. And again, normally, if something negative happens and the market reacts negatively to it, then usually you can say, well, boy, that's serious. So if the market really would have sold off yesterday, that would have really concerned me. But the fact it held up, the fact that it's higher today, really makes me feel like it wants to go on a run right here. So I think that this is something that should probably last for several days. It may not mean that the market's up every day, but overall, I think we're going to trend up for the next few days, and at least that's what the market is acting like right now. We'll look at the charts here in just a second. Another reason why I think that could happen too is if you look at the direction alerts here, where the momentum indicator is still in the buy range. We're not in that extreme range. So there's definitely room to run to the upside before you start getting into that extreme range. Breadth is just getting into that extreme range, but again, it could run. We could get several days where we run, and it could become even more extreme before you'd have to worry about a reversal risk. Sentiment is still very low. It's entering into that complacency range, but it's not in the extreme complacency range. You look at the buy-sell ratios; they have started to widen again. They come closer together. When we were talking about this on Tuesday, they've started to separate again. But and this is kind of a little bit of a, they're at a little bit of a wider range right here, but they can become even wider, as you can see with some of these other areas right here. So there's still definitely room to where you could run there. And then the sentiment indicator here, we're starting to move up closer to that red line, but we're not there yet. And so it has a feel like this could run, the market could run for a little while here. So that's what I'm going to assume until I see otherwise. But let's take a look at the individual charts here. One of the things I've been talking about for a couple weeks now was this kind of sideways range in the S&P. It looks like today we're finally kind of breaking out of that. You can see yesterday, this is what I was talking about. We were looking like we were going to break out yesterday, and then we faded into the close with all that stuff that was happening. But we've now broken out. So because we've been in this range for a while, now we're just breaking out. Again, assuming we don't fade into the close today, it looks like we should continue to move higher from here. All right, and if you take a look at hold on here. A second here, just a second. All right, so if you look at the other markets, the other markets as well are breaking out. But I want to go over to the VIX, because this is something I talked about on Tuesday when we were, we had the spike on Monday, and then what I mentioned on Tuesday was I wanted to see we were rallying up on Tuesday, but we were still at a spot. The volume was still a little bit on the lighter side, where we were worried that could that be a little bit of a sucker's rally for another move lower. What I wanted to see was that VIX start to move down, and we have continued to move lower. We were moved way lower yesterday, and then you can see the VIX moved up into the close with all that stuff that was going on, but it's back down again today. As long as it's hovering around this lower area right here, or continues to drop, that's going to be a good bullish sign. That at least from the standpoint of the big institutional traders we're going to assume that they're not too worried, and that's what it's showing me right now, is that they're not too worried about what's going on. If there was still really a lot of concern with what's going on, you'd have the market up today and the VIX up, and with people hedging. But it doesn't look like there's a lot of people hedging through this, so that gives me a little more confidence that things are going to move higher. All right, let's go into our individual stocks here. Let's take a look at. There are a lot of good ones we went over on Tuesday. I'll try not to kind of double up on the ones that we went over on Tuesday, but under computer and technology here, under the hold section, this CBAT 98 strength rank here. Again, you're usually waiting for it to go from hold to buy as a signal to get in. This went to a buy signal today. Now, we've been watching this one off and on for a little while as it pulled back right in through here, kind of pulled back in this little bit of an ABC pattern. Started to move up, came back down, and today is the first day it's finally given us that buy signal. So that's one of the reasons why I want to point this one out, because we've talked about this one a couple times. And this one looks like it's starting to take off here. Put the volume bars on, so you have some good volume behind it as well. So you had a big up day yesterday with higher, clearly higher than average volume. Another higher than average volume day today. All right, then you're looking at another one I like in that same sector in computer and technology is this MIVS or FDIS, excuse me, 98 strength rank. Microvision is the name, and you can see that you've had this little pullback right here, and again, this is one where you're at a hold signal, you're waiting for it to go back to buy. It's probably pretty close to going back to buy. Yeah, right up here you can see very close to going back to that buy signal there. So this, this market moves up another day or so, this should click into a buy signal. What I also like about this is, and you see this on a lot of stocks that that have just broken out recently after a long range. You have this long base that you've developed here where it's just moving sideways, and especially when you have a long base at a very cheap price. Usually means these companies have been in existence for a while, but their growth phase has not really kicked off yet. Whatever that is. Obviously, right into here, the stock really burst higher, went parabolic. I usually don't like to chase that first move. Whenever I see it break out of that base on a big move like that, unless it's a trade, unless it's just breaking out and you're buying the breakout, you're going to try to trade that first run. But rarely do those first runs just keep going. Usually you'll get that first burst and then you get that pullback. And so you came back and pulled back here. Could it pull all the way back to the breakout area? That's possible, but usually on these, when they're really starting to take off, they'll pull back, but they won't pull all the way back. There's just too much momentum there for it to keep moving, and so usually after that first burst, and then it pulls back, then it usually gets into more of a sustainable trend where it won't go up. It may still have another burst, but usually it'll go up and then start to kind of stair step, and you'll get that more stable trend that kind of comes out of that first initial breakout move. You can also see it sometimes form more of a bowl. So it is possible that this thing kind of moves sideways a little bit and then starts to move up where it gives you a little bit more of that bowl-shaped move. And, we love that type of a pattern if that were to start to form. But this is definitely an area where you could initially look to enter with maybe using just that buy signal. If it does start to form that bowl-shaped move and starts to break out of that, you could buy that breakout or add to your position on that breakout. Those are different decisions you can make on something like that. Obviously, it's too early to tell. It could end up all the way down here. You never know. But that's also why we wait for that confirmation of waiting for it to go back to that buy signal to get that little bit of extra confirmation there. All right, under the construction sector. Now, the construction sector is up here at the top part of the list here of these sectors. But there's very few stocks. If you look for instance, under the 90 strength rank here, or excuse me, the buy signal area here, you can see that there are only a couple stocks that would meet that criteria of a kind of a 98 strength rank. Sometimes we'll take that 97 strength rank or even a 99 strength rank. So what that tells me is I got to have a little bit of a different approach to this sector. I don't want to expect to have that 98 strength rank, because you could have stocks within the sector that are performing very well, but they don't have that 98 strength rank just because the whole sector doesn't tend to get into that higher strength rank. There's other sectors like this that you'll notice over time that you kind of have to bring that down a little bit. You still want to find a high strength rank, but you want to. So in this case, I might find some good patterns within an 80, 85 strength rank or something like that, and I could go ahead and trade those based on the fact that, relatively speaking, that's still a pretty good strength rank for that particular sector. I hope that makes sense. But there is one I do like under the buys here. These are already at buys, and by the way, it doesn't mean that you can't. You see me always go to the hold section. if you've got more time, go ahead and look under the buy section. There might be some that just barely went to buy that have great patterns. The reason why a lot of times I'll go to the hold section is because, it gives me a little bit of time to put these in a watch list and just start watching and wait for them to get to that buy signal. If you're looking for a trade right away, you could go into the buy scans right here and look for ones that have barely gone to buy, or maybe they've been in a buy for a couple days, but they haven't moved so far where you feel like they're chasing it. So, you can definitely go into those areas there. And so I did find one under the construction sector here under the buys that I liked. Was this OESX right here, Orion Energy, 93 strength rank. But I really like the kind of the sideways consolidation pattern that's formed right here. And it looks like it's getting ready to break out. And so although it's had a buy signal for a couple days now, the entry approach, and this goes back to some of those entry techniques you can use I talked about on Tuesday if you want to go back and review those. But one of those, if I missed that initial entry on a buy signal, first buy signal, after a hold, then I could buy the breakout as soon as this thing breaks out, which it could do by the end of the day if it surges into the close, but probably look to break out tomorrow. And maybe it doesn't. Maybe it pulls back again a little bit and then breaks out, or even pulls back to the bottom part of this range. You could use that entry technique for this. And then the rule of thumb on a range like this, I'll talk about this when we talk about exit strategies, but you get a sideways consolidation like this, much like the cup pattern or the inverse head and shoulders pattern. You can take the distance of that range. And again, these are estimates. These are not meant to be exact, but they work a lot. They work enough to where they're very helpful. But you can take the depth of that range right there. So you can take that distance from the top of the range to the bottom of the range, project that from the breakout area, and that gives you kind of a minimum target of where that stock could go if it breaks out. So it's possible this stock could move up, a couple dollars or so out of that breakout. Once it breaks out of that, move up another couple. It could go further than that, obviously, but that gives you kind of a minimum target you can or expectation that you could use to help you in your trade management decision there. I also found one that I liked in the hold section. And it's at the top of the list here. It's only an 84 strength rank, but this BLD, Top Build Corporation, I just like the steady kind of uptrend it's been in, the higher highs, higher lows. Recently had a higher low right here, and it's gone to a buy signal today. So this one's giving you that signal today. It'll show up. Remember, the scans update overnight. So if this holds that buy signal, then it'll move over into the buy side tomorrow when the scans update overnight there. So, but that's another thing is when you're going through these hold sections and you see one that's just gone to a buy today, or that current day, I mean, there you have an immediate possible trade, and you can jump right into it at that point. But not only does it look like you have a little bit of a steady uptrend right here, but you also have a little bit of resistance through here to where if it breaks out of that, here it broke out of it, but it came right back down, but it had a higher low right here. So it did break out, but as it came back down and it gave you that higher low, it just looks like it's getting ready to break out of this range it's been in. And there again, you can take the top of the range to the bottom of the range. If it really starts to go on a run, it gives you kind of a minimum target of where this thing could possibly get to. So that one looks like it's getting ready to really take off. And even on that breakout move right here, you can see down below with the volume, you have big volume spikes, particularly on this day right here. Now it dropped off right after that. So it did, as it started to break out, there wasn't a lot of volume on that breakout there. But that's another thing to keep an eye on is with today or with yesterday, you had a very big volume spike yesterday. it's kind of backed off a little bit today, but I think you could really gauge this if it breaks out of that area there. Do you see the volume really surge in on that breakout? And that could tell you that this thing's really getting to run. If you don't see it, if it breaks out on lighter volume, it might do the same thing it did back here, where it barely breaks out and then pulls back again. And but anyway, those are some things that I would look for on that. But that looks like it's getting ready to run, or could get ready to run. And obviously, if the market continues to move higher as well, it would definitely help a lot of these positions. Under basic materials, under the hold section here, this is another section where you don't get a lot of 98, 99 strength rank stocks under basic materials here. So I'm dipping down a little bit here to a 94 strength rank, which is right at the top, LEU, Centrus Energy Corp. And what I want to focus on here, so here's that bowl shape move that I often talk about. And obviously we missed that one right there. But I wanted to show you here, that you use the depth of the bowl and project that upward. And you can see it's actually a little bit short of that. But that's why these are estimates. But you can see, look what it did here. It ran right up to about that distance, a little bit short of that distance. But that's why we don't get so exact. I'm not saying it has to move up exactly that amount. It's just kind of a general area, but it's moved up to that area, and then it's pulled back from that. And it didn't, and it still could come all the way back down to the breakout area. I'm not saying that it doesn't have potential to come all the way back down, but that's why we're waiting for it to go back to a buy signal. If it's at a hold signal still, if it continues to drop, you'd look for it to hold that support of that breakout area. But it could still move up from here. If it goes back to a buy signal, this thing could get ready to take off again. It had its breakout, it's pulled back, retested the breakout, and then could be off and running again. So I do like that pattern. But I also wanted to show you, and I'll try to do it as often as I see it to just kind of reinforce it. But I just wanted to show you that, that rule of thumb. I didn't just make it up. It's a lot of traders use it. And it's kind of spooky a lot of times when you see it actually play out, that it's almost, almost moves exactly that spot and then starts pulling back. And it could be a little bit of a lot of professional traders know about this. So when a stock starts to break out and it's getting to that point where it's that same distance, that they stop buying because of that. They start saying, oh boy, this is getting a little overbought. It's getting to that area where sellers can step in and start pushing down. I better get out now or tighten up my stops. And then it kind of it's like the self-fulfilling prophecy. It ends up triggering that pullback. There could be a lot to that, but what do we care? As long as it's something that works and something that we can use and make money off of, we don't care necessarily why it may do it. We just want to follow along and do it. All right, one last one for today would be under industrial products, under the hold section here. And this one has a 96 strength rank. This Fuel Tech here, FTEK. And again, you have this long just consolidation where it's basically a penny stock. Had this big surge right here, very high volume, and it's been kind of consolidating through here, but it's held up pretty well. But it's kind of gone through this consolidation. Now that consolidation could last a lot longer, but it's actually gone back to a buy signal today out of that. And this is another one where if you still want to give a little bit more time to prove itself, you could wait a little bit longer for a break out of that range. So this thing got up to $6 or so. It would clearly be breaking out of that range, and then you could take that depth of that range right there and project that upward as kind of a target area. This thing could be off and running again. And I don't tend to spend a lot of time looking at fundamentals. Me personally, I'm just a trend trader. There's oftentimes I'll trade stocks. I have no idea what they do, what their products are, and I'm just going off of what the chart is showing me. I figure there's other people that are doing that analysis and they like it for some reason. I don't care what reason they like it, but they're buying it. So I'm going to buy it. They're selling it. I'm going to sell it. But if you want to go back and find out a little bit more about the company and why it spiked up right there, and maybe that gives you a little bit more confidence in the reason for why it spiked, just to why you might want to hold this longer term or hold it for a while or trade it for a while. You can do stuff like that as well, but I usually don't spend a lot of time doing that. Sometimes if I know a little bit of background on the stock, I'll point that out. But that's a cool thing though about this type of trading where you're just trading the trends. You don't have to spend so much time trying to research, because in many cases I found over the years, and this is why I really kind of focus more on trend trading, is that it didn't help me that much. It's like in fact, sometimes it would hinder me because I would do research. I get really excited and really like the reason for that stock, potential for it to go higher, and then the stock would start trending downward. Well, what do you do as a trend trader if that stock is acting like a downtrend? What do you get out of it, right? Or you short it. But it was hard for me to get out or hard for me to short it because I loved my reasons for it going higher so much. I love those reasons that it became hard to follow what was actually happening. It's hard to believe what was actually happening. And so what I like to do is just take that other stuff off the table where it doesn't hinder me. I'm just going purely off of what that chart is telling me to do. It's acting like an uptrend, I'm going to buy it. If it starts acting like a downtrend, I'm going to sell it or short it. And it really helped me kind of become less emotional about the decisions, and it's kind of like a general manager of a football team or something. If he starts really falling in love with the players, it's hard for him to replace the players, even though they might be, especially star players, people that are going into the Hall of Fame, but they're at the end of their career and their production is dwindling. They should be replaced, but it's hard to do because you're emotionally attached to that player, and so it's sometimes it's a smart thing to do to kind of not get too involved with the stocks that you're trading as far as the fundamental reasons or the feel good story of why it's good stocks could be the next Tesla or something like that. But I'll be honest with you, there are times where I get curious and I want to know a little bit more about what I'm getting into, but I just try not to get it too in detail to where I start to ignore the chart or start not to trust the chart. All right, that kind of wraps up the stock specific side of the class. I'm going to get into the trade management portion here. And again, I want to emphasize that there's lots of different techniques you can use. We're just kind of going over some basic ones here. Actually, let's stay with this one here and go the signals. Obviously, the one of the most basic signals with the software is the buy signal, the sell signal. What that's really meant to do is to simplify the process. The software attracts a lot of people that are professionals that have other things. They're running businesses. They want to get in the markets, but they just don't have the time to become expert traders. And so they rely on algorithms that are designed to simplify it, like give me a buy signal, give me a sell signal, and that's what TradersPro is designed to do, is to kind of simplify that based on its algorithms, show you when a stock is more likely to go up or keep going up by giving you that buy signal, gives you a hold signal when it could be in a transition phase, and then obviously a sell signal when it's starting to move lower or acting like it wants to move lower. So, we have a first buy signal after the hold on this stock right here. You could enter in on that buy signal, and your exit strategy could simply be, I'm going to stay in this thing until it goes back down to a sell signal. You could say, well, could I get out if it goes back to a hold signal? Yeah, you could do that as well. But keep in mind that you could be bouncing in and out of this thing a lot, because that hold signal can especially when you're right here where it barely went to a buy signal. I could get in and it could have just a little bit of a pullback tomorrow and go right back to a hold signal, and I'm getting out of the loss. Meanwhile, it could take off again because that's what stocks do. They stair step. They can have these little pullbacks, and I could miss the big move. So the bottom line is there is no perfect technique you could use where you're getting in at the exact start of a move and getting out the exact end of a move. And you'll drive yourself crazy if you think it's possible to know that and know exactly where those areas are. You'll spend thousands of dollars on software programs thinking that they can do it, and they just can't. Nothing out there can perfectly get you in at the bottom and out at the top. And so I mentioned this on Tuesday that one of the goals with the techniques I was teaching on Tuesday was, let me show you some aggressive entry techniques you could use for when you're not looking for a lot of confirmation. Because if I waited, sometimes if you're waiting for a buy signal, in this case it's not that big of a deal, but it might be $3 or $4 later that I get that buy signal. I missed $3 or $4 of the move, waiting for that confirmation. And maybe there was a more aggressive entry signal that showed up before that I could have used to get in. Now, the benefit of using an aggressive entry technique is that I could get in earlier, but the risk is I could be getting in too early. Maybe it still has another move down, and I don't have a lot of confirmation that thing is going up from here. So there's always a pro and a con to every technique. Yes, I might get in earlier, but I might also have more losses because I'm getting in too early on some positions. So getting that extra confirmation would be more likely. Waiting for that buy signal would be more likely that the trend's going to continue. But the downside is I might give up that $2 or $3 to get that additional confirmation. So and so you have to kind of find where your happy medium is. Or like I mentioned on Tuesday, it could just be based on different conditions. When the market is really acting bullish, like right now, the market is really acting like it wants to go higher. So I'm more apt on my trades to get a more aggressive entry technique, use a more aggressive entry technique. And because it based on those conditions, it should pay off, having that more aggressive approach. Now, again, even though I talk about conditions being more bullish or acting, market really acting like it could move higher, doesn't mean it always does it. Things can change very quickly in the markets. You can go from being really bullish to, man, is the world coming to an end? And that can happen very, very quickly within days, And so I don't want to assume that we can always know when these aggressive or when these conditions are in place and that they always end up working. I don't want to imply that, but I'm just giving you an example of the confidence I have in the market going higher from here. I personally would use more aggressive techniques right now. Now, last week, when the market was, or last couple weeks or so, last few weeks of December, when the market was just kind of back and forth, you'd go up a couple days and then come down, and you just really weren't sure which direction it was going to go in. That was an area where I was using a little bit more confirmation before I was getting in. And so on Tuesday I went through kind of an aggressive entry, kind of an intermediate one, and then usually the buy and sell signals are going to be more of is going to be a lot of confirmation, or more of for those that really are risk averse, you really want to see the trend intact before they get in. That's the approach that would work best for them. Okay. Obviously, the other approaches also require that you have a little bit more knowledge of what you're doing. You know how to recognize chart patterns, know how to recognize candlestick patterns, things like that. So if you don't have the time to be able to learn that, then you want to stick to just the basic signals as your approach, because that's why you're using the software. All right. So obviously, the sell signal is the most obvious one you could use to get out. Stay in that thing until you get a sell signal. Another one that works along with this as well is just using a trailing stop. So you get in the position, and a lot of big fund managers will use like a 5% trailing stop. So if that stock drops 5%, now that probably wouldn't work on very well on a stock like this, because you've got a really cheap stock. So if it moves up, it could move up a dollar in a day, and that's a 25% move or something like that, and so you could be bound. You might, and so there, even with trailing stops, you might have to adjust a little bit based off of the stock you're looking at. One thing you could do is look at just the history of the stock. If you've got a stock that has a nice steady, that tends to, when it moves, it has a nice steady uptrend. When it does, not always the same. It's not always going to have the same movement there. But if you can calculate the average pullback, how much it on average that it pulls back. Maybe you find that on average it pulls back 3%. Well, then that 5% trailing stop would actually work pretty well, because you're below. You wouldn't get bounced out of that normal kind of pullback that stock makes, or you shouldn't. And when it does, if it does drop more than 5%, then you're getting out of the trade, and hopefully you captured a good portion of that trend. Maybe you like to use a little bit of a tighter stop, where you may, on a stock that's maybe going really parabolic, you got in and it's really starting to go up straight. Well, those tend to come down very fast when they're done going up, and so maybe you use a 1% stop, trailing stop on that, because you know that when it does pull back, it's probably going to pull back in a big way. You want to capture as much of the gains. You don't want to get out yet, but you want to capture as much of that parabolic move as you can. Maybe you throw in like a 1% trailing stop for that situation. So it depends on, you can use just a general trailing stop where it's the same on everything you're using, just because you want to simplify it, or you can kind of adjust it to each stock. But that's an approach as well. But again, with a trailing stop approach, you're not going to get out at the highs of the move. You accept that, you understand that. You're going to get out when it pulls back off those highs and pulls back far enough where it triggers your trailing stop. And a lot of people like that approach, where they get in, they like the pattern, they like the trend, they get in, they put in that trailing stop, and then they just forget about it. They don't even really look at it. They wait until they're reading their broker statement and it says that they ended up getting out of that trade, and they see whether that ended up getting out at a gain or a loss. And by the way, a trailing stop, if I got in right here and I set a 5% trailing stop on this or something like that, it could turn around, go right against me right away, and it could end up being a loss. But obviously you would keep that loss at a 5% loss, or hopefully close to that, because you set that trailing stop in. Okay. So those are kind of real basic or easy approaches. Let's get into, we can get into some of the ones that I've kind of already talked about, and I talk about it all the time, so I won't spend a lot of time on these because I cover them all the time. But the one we just looked at, which one was it again? It was I think it was the basic materials. Yeah, this LEU. I talked about, that bowl, when you get that bowl-shaped move, and when it finally breaks out of that, which it did right here, has a tendency to go up about the same distance as the bowl. And you'll notice that, and I've talked about this a number of times, this technique works on the bowl-shaped move. We talked about if you have that inverse head and shoulders pattern, that when it breaks out of that neckline, it will tend to go up about the same distance as the base of the head to the bottom of the head there. You can use this. We saw, I won't pull the stock up, but we have a stock that's moving in a sideways range. We talked about this one earlier. It doesn't have to be a perfect sideways range. And again, this is where you can't get too exact with this. Maybe it dipped down a little bit lower here, or moved up a little bit higher somewhere, but you have a basic range, and you just take the distance of that range and you project it on out of the breakout area, and that stock will have a tendency to go about that same distance. And a lot of times what it'll do is it'll break out and then make that run up there around that area, and then it'll pull back and either come all the way back to the breakout area or partially back. It doesn't always have to come all the way back. And that's what we're looking at here, is that it may not come all the way back to that breakout area, but partially back to it. And so by understanding the tendencies of these stocks, I could buy. If I bought down here and it's breaking out, I could hold it knowing that it should go up to this area. It could go further than that. It could come this one came a little bit shorter than that distance. So again, I don't want to get so focused on this exact spot that says it has to get there, but what it gives me is a destination that I can focus on, to where if I have a down day, which you're bound to have a down day somewhere in here, I don't panic and say, uh-oh, I better get out now. I can weather that a little bit because I know the tendency is it should continue to move higher. Even if I have to wait a few days for it to start going again, it should work its way back up there, because maybe it barely breaks out, comes back, immediately retests the breakout, and then starts working its way up. Because like I said many times on this measurement here, it doesn't mean it's going to go straight there. This thing could go up, come back and retest a breakout. It can move sideways for a little while, or just kind of chop around for a little while, and then have a big move, and then consolidate again, have a big move, and then it did end up going up that distance, but it took several weeks. It didn't go straight there. It had some consolidations within the process of getting there, but it got there. And what can allow me not to get bounced out of the trade through some of these gyrations is knowing that it should get up to that area there. And if it does get close to that area, then starts dropping more dramatically, or gives you maybe a sharper bearish reversal candle or something like that, I could go ahead and just get out. Sometimes I'll get out when it gives me a bearish reversal candle. I'm close to that area, but I also recognize that bearish reversal candle means it can pull back for a few days. I just go ahead and take my profits. But another thing that this can help you with is that you can trade this first move right here, however long that takes. And then if you do get that pullback, especially if it comes back and pulls back to that breakout area again right here and holds it and starts to move up again, now I've got another trading opportunity. I can jump back in this thing again and take off. So when you know these different entry techniques and different ways that you can trade these stocks, then I can find trading opportunities all the time. I could get in down here, recognizing this is looking like it's forming a base. Now, probably right in here is where it really started to look like it's kind of forming that base. I could get in expecting that it should at least run to that breakout area right there. Maybe I see it already ran to that breakout area, but now it's starting to move sideways right here along there, starting to form kind of a handle, of a cup with handle formation. By the way, I'm filling out some of these chart pattern formations. I do these tradings every Tuesday, Thursday. If you go back couple weeks, I did a class on chart patterns where I covered some of these chart patterns I'm talking about here. And then I've done other trainings to ABC patterns or trace. You might want to go back and review some of those and that's why they're recorded. You can go back and review them so you can get some of these techniques down. And I'll be going over them again. Once I go through the set of them, I'm going to start going over them again, and so they'll be repeated again later on too if you just want to wait till then. But they all they kind of all build on each other. So sometimes you might be a little bit confused with what I'm talking about, but I've taught it in a different class. But maybe you see this little consolidation right here and you say, oh boy, that looks like a cups form. I'm consolidating right here. This thing could be ready to break out, so I'm going to go ahead and get in before it breaks out, or you could wait for it to break out and recognize, boy, that just broke out of a cup pattern there. This thing should run that distance. So you might trade that, and then maybe you get out. Here's a bearish reversal candle right there. You get out, it pulls back. You say, oh boy, it's getting back to the breakout area here. If it starts to move back up again, you get a nice strong bullish reversal candle, or it goes back to a buy signal or whatever. You can get in on that. So that way, when you're going through different charts, you can there's lots of different times to get in and get out. You don't feel like you have to always try to get in at the bottom or something, or that's the only time you get in. People that got into Tesla this year made a ton of money, even though they didn't get in when it was a $5 stock. I would be willing to say that it's extremely improbable that you're going to find a $5 stock that's going to go to $1,000 in your lifetime. Many of you have done it, or may have done it, but it's just not likely that you're going to be, because usually when it's a $5 stock, it doesn't look at all like it's going to be that $1,000 stock at that time. It's like 1,000 other $5 stocks that think they're going to be the next Microsoft, or the next Tesla, or the next Apple, or whatever. So don't get so caught up on trying to find that $5 stock that's going to go to 1,000. There's plenty of money to be made on Tesla after it already was popular, going from $100 to $200, or from $500 to $1,000. There's plenty of times to be able to get in and trade these things, and there's lots of different ones out there to be able to trade. A lot of times, it just comes down to being able to recognize the possibilities, or recognize the opportunities to make those trades. All right, and another one you can use too, if we look at let's look at Jumia. This is what we talked about on Tuesday. Let's say Jumia starts to move up, or let's say I get into Jumia. Well, what are some exit targets I could use? And let me switch off the signals here, because we can go off of candlesticks right here. So Jumia, we were looking at this on Tuesday. Had a little bit of a bullish reversal bar right there. I said you could buy it aggressively. That's an aggressive entry as just buying off of the bullish reversal bar, right? But there's that if it doesn't keep going up, you might get stopped out immediately. It dropped yesterday. You could have possibly gotten stopped out of that thing, depending on what your stop loss strategy was. And we can cover stop loss techniques as well in a later training. But you might have got bounced out of that trade, even though it rebounded again right here. So when we talk about getting confirmation and trying to make that decision, that's what I'm talking about. Is you could think you're getting in right at the bottom because you had a drop, you had a pullback right here, and you had that bullish reversal candle. But the very next day, it might not look very good, and you might get bounced out of that trade, only to find that it was just temporary and it's right back. Now, let's say I use the technique that I talked about on Tuesday of waiting for it to close above the high of the previous day. So you have the bullish reversal, and I think I talked about this one. I might have even talked about this on with Jumia, where I said you might want to wait for it to see if it can close above the high of the previous day, which I felt like it would, because of the momentum of the market at the time, but it ended up not doing that on that day. Now, here was the high of yesterday. Today, it looks like we're going to finally close above the high of the previous day, which we haven't done during this whole pullback right here. We haven't closed above the high of the previous day. So you close above the high of the previous day today. You could check volume on that too. You have a little bit of above average volume, although it's still on the lighter side based on where it's been, kind of through this run right through here. But you could use that as an entry technique. And you might say, so you might say that, what would, so let's say I get in the trade on what could be my exit strategy? Well, one of the entry strategies, I could wait for it to go to a buy signal and then obviously get out on a sell signal. I could, a lot of times on these little pullbacks like this, and I'm just looking for a trade, I'll use the beginning of the pullback area right there, so the breakout area right here. So I could trade a move from here to here I do that a lot with option trades where I'm using the leverage of an option, and I'm not I don't need a very big move to make a big percentage. So I'll just use that previous high right there as a target. Now, if it does continue to move higher, and let's say it breaks out of this area right here, so I could get in this trade. Even if I wait for a buy signal, you could do this. You get in the trade. I could, let's say I want to get a bigger move out of this. Okay, well, the first area you would expect it to get to if this is starting a new uptrend is the previous high right here. It should get to here if it's continuing to move higher, because what is an uptrend? It's higher highs, higher lows. So it should get to that point. Once it gets to that point, you're saying, okay, it could pause a little bit right here. Sometimes it'll pull back a little bit when it gets to that previous high, because that's an area of resistance there. But if it breaks out of that, you could add to your position right there on that breakout. Or if you miss this part of the trade, you could buy the breakout up here. And then what could I use as an exit target? Well, you can, we talked about using the distance of the bull, distance of the inverse head and shoulders pattern, projected, taking that distance and projecting it. You could take the distance of the pullback right here and project that upward. A lot of times stocks will move up about the same distance of the pullback. If you look at this pullback right here, so here's a pullback right here. When it broke out, it was shorter than that distance, but it moved up about that same distance. And really, all these are designed to do is just give you a target area. What you say? Well, yeah, but it didn't go that distance. You have this. It started to move right here. It didn't quite go that distance, but then you got a bearish reversal candle right there. Maybe you decided, okay, it's close enough, and I'm getting this bearish reversal candle. I'm going to get out. Or one of the other exit strategies you could use is the opposite of the one we talked about as an entry technique here. Here we were waiting on this pullback. We were waiting for a close above the high of the previous day as a confirmation entry, which we'll probably get it today. Well, could I also use a close below the low of the previous day as a exit strategy? Well, sure. This stock is running right through here. When did it close below the low? Now, again, the language there is critical. It's not trading below the low or trading above the high of the previous day. It's closing above the high of the previous day or closing below the low of the previous day. When did it finally close below the low of the previous day? Well, that next day right there. And you can say, okay, maybe I get out at that point because this thing is now acting like it could be pulling back further or dropping further. I don't know, And that's a real quick exit strategy, and you can get bounced out of a trade pretty quick sometimes with it. So that's the downside of it. The downside of the benefit of this is it can get you out closer to the top, because you're not going to sell signal until this thing really dips down. It can get you out closer to the top, but it can also get you out early. Here was a run up right here. Here we closed below the low of the previous day, barely, but we barely closed below the low of the previous day, and then it turned right around and went up further. So I'm not trying to say that this is the perfect technique. There is no perfect technique. There's always pros and cons to every technique. But, and this is where I like to use that technique, if I see a stock starting to go parabolic right here, and it could go parabolic for a while, and you don't want to get out too early on it, then I could look for just a real aggressive bearish reversal candle, which you got right here, which would have gotten you out early still, but you would have captured a good portion of that run up with it. Or I could have waited for a close below the low of the previous day, which actually happened right here, where you probably would have made a little bit more money, but because here's where it closed and here's where this one closed, but you caught a big portion of that parabolic move with that more aggressive exit technique. In it now, if you were waiting for a sell signal, like I said, you would have probably given back almost all of that parabolic move before that thing went back to a sell signal. The only way you're going to get out when you have a real big parabolic move like that, the only way you're going to get out on a sell signal and be able to keep the majority of the gains of that parabolic move is if it has a parabolic move and instead of coming way back, it consolidates, it moves sideways right here and allows the algorithm to catch up, and then it drops to where it goes. So in the sideways move, it may end up going to a hold signal eventually, and then it pulls back and goes to a sell signal, and then you still caught most of those gains. That's why I like to have different exit strategies and know some different exit strategies, because if it's really taken off, you don't want to get out too early. You want to let it run, but you also don't want to have it give all of it back. And a lot of times these things can drop very quickly after they go straight up. This went straight up right here, and look how fast it pulled back and gave it back. This was a really big run, but look, in three days it came back almost 50%. But I tell you, I probably would have gotten out on a day like that on a bearish reversal. You finally get a bearish reversal day candle, and I'd be fine with maybe missing out on that last part of the move because you caught a good chunk of this move right here. But those are different techniques you can use. Let's see if I've missed. I think that about covers just some of the basic ones. By the way, here, look at this here. Here you have this bowl-shaped move right here. Had a little bit of a handle, couplet handle. Broke out right here. Take the distance of the top of the bowl and the bottom of the bowl. So could I have, what if I was going to use a close below the low of the previous day as my exit strategy? This thing was going parabolic right here. I know that by rule of thumb, it could go about the distance of the top of the bowl, the bottom of the bowl, projected from the breakout area. You have a bearish reversal right here, but there's still a ways it could go before it got to that point. And you weren't going to use a bearish reversal candle anyway. You were going to use a close below the low of the previous day, but then you get this burst of a move right to that measurement. I might say, I'm not going to wait for the close below the previous day. I'm fine with that right there because this thing is probably in an area where it's going to pull back soon. Maybe it goes up a little bit higher, but it's probably going to pull back soon. I'm happy with that gain. I'll take it. Now, I usually only do something like this on a parabolic move because I know those don't last very long. I know that I'm pushing my luck. This has met a number of target requirements or target rule of thumbs. And, I'm getting really greedy if I really expect it's going to make a huge move higher. I shouldn't have the disappointment of getting out too soon, having met all those criteria. And you're probably real close. And sure enough, the very next day, over the next 3-day period, it retraced 50% of that last move right there. So anyway, that gets you started. And like I said, it's not meant to be all inclusive. There's lots of other techniques you can use, but as I did with the entry techniques, I've shown you some techniques that are more aggressive. Just waiting for that bearish reversal candle would be a very aggressive exit. The benefit of that is that maybe you do pick the top and you're out right at the top and you feel good about getting almost everything out of that trade. But the downside is maybe you got out early and it goes up another 50%. You missed it. Maybe a little bit more of an intermediate technique is you could maybe not only wait for that bearish reversal, but wait for it to close below the low of the previous day. The benefit of that is maybe you don't get bounced out too quickly on a one-day reversal. But maybe it drops a bit the next day where you finally close below the low of the previous day, like it did right here, and you give back a little bit more than you might have wanted to. Benefit of a trailing stop is that you might be able to stay in Tesla as it goes from $5 to $500, although you wouldn't have, because it made some big drops within that trend as it worked its way there. But point being that maybe you're staying able to stay in a longer trend for a long time. Maybe it's something like Apple, where you're like, maybe you have a really wide trailing stop with Apple, where you're in that stock and you're going to close your eyes and just forget about it until it's maybe a millionaire down the road. Although I don't know that getting in right here would make you a millionaire, but it's possible. It could double and triple from here possibly. But the point is that you could stay in those trends a lot longer because you're not getting bounced out of even decent little pullbacks. You're not getting bounced out of them, and you're just looking at the very long term. So this gives you some different ones to work with here that you can use and find that either best suits your trading style or the conditions, like I've mentioned. Maybe you're going to use a more aggressive exit strategy because the market's starting to look a little bit more bearish, or there's some worrisome things coming up that could make the market more volatile, and so you're gonna use you're gonna have a shorter leash on your trades before you're getting out. All right, that's all I have. Thanks everyone. Have a great weekend, and we'll see you on Tuesday for the next market update. Bye now.